A 21-mile-wide strait carries 1/5 of the world's oil, and right now, it cannot stay open on its own. The United States is sending warships, aircraft, drones, and thousands of troops to get traffic moving again. That operation is called Project Freedom, and that changes everything. Because Project Freedom is not America simply opening Hormuz. It is America trying to prove that the old system still works, that oil can still move, that ships can still pass, that America can still guarantee the routes the world depends on. But here's the problem. If the system still works, why does it need this much force to move one ship? Let's start with what we actually know. On May 3rd, the United States government announced Project Freedom. The following day, May 4th, operational support for commercial shipping through the Strait of Hormuz began. The official framing, as stated by U.S. Central Command, CENTCOM, is measured and deliberate. Support for commercial shipping, freedom of navigation. Not a blockade, not a convoy system in the classical sense. Not a declaration of war, support, guidance, escort. The assets involved are not small. 15,000 service members, more than 100 aircraft, guided missile destroyers, unmanned aerial and maritime platforms. Drones, essentially, operating in one of the most contested stretches of water on the planet. Now, step back for a moment. 15,000 people, over 100 aircraft, guided missile destroyers. To support commercial shipping, that is not a rescue operation, that is not a port authority. That is a military posture deployed at scale into a civilian trade corridor, because without it, the corridor does not function reliably. Think about what that sentence means. The world has spent 70 years building a system of global trade on the assumption that the sea lanes are open, that a tanker leaving the Persian Gulf can reach Japan, South Korea, India, China, or Europe without requiring a naval escort, that the market works because the infrastructure beneath it, the ships, the straits, the satellite navigation, the insurance, all quietly functions in the background. Project Freedom is the moment that assumption became visible. Because when you can see the security apparatus, when it becomes a headline, a deployment order, an operational code name, it means the invisibility has ended. The old system was cheap because security was invisible. Project Freedom makes it visible. And when something becomes visible, it becomes a cost. But there is something else here, something that does not show up in the CENTCOM press release. Project Freedom is not only about physically moving ships. It is about something more fragile and more important. Confidence. Confidence in the route. Confidence in the U.S. commitment to keep the route open. Confidence among ship owners who are deciding right now whether to route a vessel through the strait or divert it around the Cape of Good Hope, adding 3 weeks and hundreds of thousands of dollars to a single voyage. Confidence among insurers calculating war risk premiums. Confidence among commodity traders pricing Brent crude. Confidence among the governments of South Korea and Japan and China and India, governments that depend on this corridor for a significant fraction of their energy supply. Project Freedom is not a mission, it is a message. And here is the question that message raises. If America needs this much force to send one message, what does that say about who is listening? To understand why this matters, you need to understand what Hormuz actually is. Pull up a map. The Strait of Hormuz sits at the mouth of the Persian Gulf, squeezed between the Islamic Republic of Iran to the north and the Sultanate of Oman, and by extension, the Arabian Peninsula, to the south. At its narrowest, 21 miles. The navigable shipping lanes, the actual corridors where tankers can safely transit, are narrower still. 2 lanes, roughly 2 miles wide each, in opposite directions, with a separation zone in between. The geography is not incidental, it is the entire point. The Persian Gulf is essentially a closed basin. It has one exit. One. Every barrel of oil that leaves Saudi Arabia by sea, every cubic meter of gas that leaves Qatar, the world's largest LNG exporter, every shipment from the UAE, Kuwait, Iraq, and Bahrain that moves by water passes through this single corridor. There is no alternative that is fully equivalent. Saudi Arabia has the East-West pipeline, the Petro Line, which can carry crude across the Arabian Peninsula to the Red Sea port of Yanbu. The UAE has the ADNOC pipeline to Fujairah on the Gulf of Oman, bypassing Hormuz entirely. These are real bypasses. They exist. They move real volumes, but they cover only part of the flow. The majority, the overwhelming majority, still goes through the strait, and the flow is staggering. Approximately 20 million barrels of crude oil and petroleum products per day. To give that number some weight, the entire United States consumes around 19 million barrels of petroleum products per day. So the volume transiting this 21-mile corridor each day is larger than the daily consumption of the most oil-intensive economy in human history. Add to that approximately 1/5 of all LNG traded globally in 2024. Qatar, the world's largest LNG exporter, has essentially one way out by ship, through Hormuz. This is not a waterway. This is infrastructure. This is a valve on the global energy system. And here is the part that the markets understood before most governments admitted it. You do not have to close the strait to cause damage. You only have to create uncertainty about whether it will remain open. When war risk insurance premiums spiked, some estimates put the increase at several 100% above baseline, it was not because tankers were being sunk at the rate of World War II convoy attacks. It was because underwriters looked at the situation and decided that the probability of an incident had increased enough to reprice the risk. Markets do not wait for disaster. They price the possibility of disaster, and that repricing is not abstract. It shows up in freight rates, in shipping schedules, in the decisions of shipowners about which vessels to send and which to hold. Around 2,000 vessels were reported as effectively trapped or significantly disrupted during the height of the crisis. Around 20,000 seafarers were caught in the uncertainty. 20,000 people, engineers, cooks, navigators, deckhands, whose daily reality became a function of geopolitical calculation. That is the Strait of Hormuz. Not a line on a map, a pressure point on the world's circulatory system. And right now, that pressure point required a military operation to keep functioning. Which brings us to the part the press releases do not emphasize. This is not really about Iran, or rather, Iran is the immediate actor. But the strategic stakes extend far beyond any bilateral confrontation between Washington and Tehran. Here is the geopolitical paradox at the center of Project Freedom. The countries most dependent on the energy flows through Hormuz are not American allies in any simple sense. They are the economies of Asia, and the single largest destination for Hormuz oil, by most trade flow estimates, is the People's Republic of China. The numbers, attributed to trade flow analysis, China accounts for somewhere between 37 and 38% of the oil flows through the strait. Asia as a whole, China, Japan, South Korea, India, and the rest, receive something in the range of 89% of Hormuz exports. Let that settle. 89% of the oil leaving the Persian Gulf by ship goes to Asia, and approximately 1/3 of China's total oil imports depend on this route. The United States, a country that is now a net energy exporter, a country that has reduced its own dependence on Middle Eastern oil substantially, is deploying 15,000 military personnel and over 100 aircraft to protect a trade corridor that primarily serves the energy needs of China and its neighbors. That is not an accident. It is not altruism, and it is not stupidity. It is the logic of the international system the United States built after 1945, and the logic that the United States is now both defending and struggling with simultaneously. The American strategic position in the world rests, in part, on being the guarantor of global trade routes. The country that keeps the sea lanes open, the country that operates the aircraft carriers, maintains the naval bases, conducts the freedom of navigation patrols. This posture confers enormous influence, not because America controls trade directly, but because every trading nation on Earth operates within a security architecture that the United States largely provides. When that architecture functions invisibly, when ships pass, oil flows, markets price normally, the architecture seems optional, background noise, easy to take for granted. When the architecture becomes visible, when it has a name like Project Freedom, the question becomes, what is this worth, and to whom? China is being reminded in real time that a significant fraction of its energy security depends on a corridor it does not control, transiting a region where it has limited military presence, protected by the navy of a country it considers its principal strategic competitor. That is an extraordinary vulnerability for the world's second-largest economy, and Beijing knows it. This does not mean the United States wants to cut China off. It does not mean Project Freedom is secretly a China containment operation. The operational objective is genuinely what CENTCOM says it is: support for commercial shipping, freedom of navigation. But China is watching, and what China is watching is not just the deployment, it is the demonstration of dependency. The signal is not sent in press releases, it is sent in the daily calculation of energy ministers in Beijing, who look at the Strait of Hormuz and understand that their country's industrial output, the manufacturing that drives the Chinese economy, the steel, the petrochemicals, the power generation, rests on a narrow neck of water they do not control. That is why the investments in alternative pipelines, through Central Asia, through Russia, through Pakistan, the dream of overland routes that bypass the maritime chokepoints, have accelerated. Not because they are immediately practical, but because the alternative, permanent strategic dependency on a corridor patrolled by the U.S. Navy, is increasingly uncomfortable. Look up the Strait of Hormuz on a map. You may never think about insurance premiums for supertankers, or the geopolitical implications of LNG flows to Northeast Asia, or the strategic calculus behind a naval deployment to the Persian Gulf. But you will see Hormuz on a receipt. Here is the chain. It is not complicated. It is just invisible until it isn't. When the risk of disruption in Hormuz rises, oil markets respond, even before a single barrel fails to arrive. Energy traders price the probability of supply disruption into futures contracts. Brent crude, the benchmark for internationally traded oil, moved above $100 per barrel during the height of the current tension. Some analytical estimates, pending final verification, put the intraday range during the most acute period significantly higher than that. When Brent rises, it flows through the entire economy with a multiplier: fuel for trucks, fuel for aircraft, fuel for ships carrying the goods you buy. The cost of diesel, which runs most freight transportation in most of the world, moves with oil prices. When diesel is more expensive, moving things costs more. Everything that moves by truck, train, ship, or plane gets more expensive to deliver. But it doesn't stop at transportation. Oil and gas are feedstocks for the chemical industry. Plastics, synthetic fabrics, fertilizers, pharmaceuticals, these industries all draw on petroleum-derived inputs. When energy prices rise, production costs for an enormous range of manufactured goods rise with them. Fertilizer costs affect food prices. This is not a metaphor. The connection is direct and well documented. When natural gas, a significant fraction of which transits Hormuz as LNG, becomes more expensive, the cost of nitrogen fertilizer rises. And when fertilizer costs more, the cost of growing grain rises. And when grain costs more, bread, pasta, animal feed, meat, these prices feel it. A rough analytical benchmark. A $10 increase in the per-barrel price of oil tends to add meaningful inflationary pressure across the economy over the following months. Quantifying that precisely requires an economist and a specific context. But the direction of the effect is not in dispute. And here is the part that makes this more than a temporary inconvenience. When businesses expect energy and logistics costs to remain elevated, when they stop treating a price spike as an anomaly and start treating it as the baseline, they adjust their forward pricing accordingly. They build the risk into their models. They raise prices not because costs are high today, but because they expect costs to remain high or go higher. That expectation can become self-fulfilling. And once inflation from elevated energy costs becomes embedded in wages, in service pricing, in rent, in the cost of everything, central banks respond. Interest rates, which affect mortgages, car loans, business borrowing, government debt, these become variables in an equation that started with a 21-mile strait in the Persian Gulf. That is the real price of a world where trade routes are no longer trusted, not a headline number, not a single dramatic moment, a steady structural increase in the cost of everything that moves, everything that is made, and everything that is borrowed to pay for it. The cost does not stay in the Gulf, it comes home. Let's return to where we started. A ship moved. On May 4th, commercial shipping through the Strait of Hormuz resumed with American support. Project Freedom began. And the temptation, the comfortable narrative, is to treat that as resolution. Problem identified, assets deployed, passage restored, crisis managed. That narrative misses the point. Project Freedom can move ships. It cannot move the clock backward. It cannot restore the moment before Hormuz required a named operation, before 15,000 service members had to be positioned there, before war risk insurance premiums tripled, before 20,000 seafarers found themselves caught between the interests of states they did not choose and supply chains they cannot control. The operation is real. The deployment is real. The ships are moving. But what the operation reveals is more significant than what it resolves. It reveals that the system, the integrated, interdependent global trading system that lifted billions of people out of poverty and connected supply chains across 6 continents, was operating on assumptions that are no longer reliable. The assumption that the sea lanes are open by default, that a vessel cleared by customs in one country can arrive at a port in another country without requiring a naval escort, that commercial shipping is, in the baseline case, a civilian activity governed by contract and insurance and international law, not a military operation requiring air cover and unmanned platforms and guided missile destroyers. Those assumptions built the world you have lived in for the past 30 years. They are now being renegotiated. Not in Geneva conference rooms, not in treaty texts, not in multilateral summits. They are being renegotiated in the operational decisions of military planners, in the premium calculations of Lloyd's underwriters, in the routing decisions of shipping companies, in the sourcing decisions of corporations that used to buy from wherever was cheapest and now have to ask, can we count on that route? The world is not ending globalization, it is changing the price. Globalization is becoming more expensive, more militarized, more fragmented, more conscious of the geography it used to take for granted. The old system was invisible because the cost of keeping it open was absorbed somewhere else. In defense budgets, in diplomatic arrangements, in the maintained credibility of American naval power that patrolled the sea lanes so that commercial vessels didn't have to think about them. Now the cost is becoming visible, and when costs become visible, they get distributed. To companies, to governments, to consumers, to you. Think about what that means structurally. In a world where trade routes require active military protection, the countries that control strategic choke points hold a different kind of power than in a world where the routes are open by default. The question of who controls the Strait of Hormuz is not a question about Iran's nuclear program or U.S. military posture. It is a question about who pays for the security infrastructure of global trade and who gets to set the price. The question of who controls the Taiwan Strait is not just about China and Taiwan. It is about who controls the movement of the advanced semiconductors without which modern economies cannot function. The question of who controls access to the Black Sea is not just about Russia and Ukraine. It is about who controls the agricultural exports that feed hundreds of millions of people across Asia and Africa. Choke points are becoming leverage, and leverage in international relations is exercised. Here is what remains unresolved. Project Freedom demonstrates that the United States still has the capacity to project force into the Persian Gulf at scale. 15,000 personnel, over 100 aircraft, the operational ability to provide support, guidance, and escort along one of the most contested transit corridors on Earth. That capacity is real, and it matters. But capacity and credibility are not the same thing. Capacity is what you can do once. Credibility is what other actors believe you will do consistently. It is built over time and can erode faster than it accumulates. Every time a route requires a named military operation to stay open, the underlying question becomes louder. Is this sustainable? Can the United States maintain this posture indefinitely? In Hormuz and in the Red Sea and in the Taiwan Strait, and wherever the next pressure point emerges. And what happens in the countries, China, India, Japan, South Korea, the Gulf states, that are watching this and drawing their own conclusions about whether to continue relying on a system with American security guarantees at its center or to build alternative arrangements. China's investments in pipeline infrastructure through Central Asia, India's development of alternative energy corridors, Gulf states' investment in bypass infrastructure that reduces, though cannot eliminate, their Hormuz dependency. These are not provocations, they are rational responses to a visible fragility. When the infrastructure of global trade becomes visibly fragile, every actor in the system starts hedging, building redundancy, diversifying routes, accepting higher costs for greater control. And as each actor builds its own hedge, the integrated system that made global trade cheap becomes less integrated, less efficient, more expensive, more political. That is the transition we are watching in real time. Not the end of globalization, the end of cheap globalization. The system is speaking. Through the deployment orders, through the insurance premiums, through the disrupted schedules of 20,000 seafarers, through the oil price movements that will, over months, arrive on the receipts of people who have never thought about the Strait of Hormuz. The system is saying, the era when security was invisible has ended. The era when trade was open by default has ended. We are entering an era in which trade routes have to be actively maintained, through military deployment, through political negotiation, through the willingness to pay, explicitly, for something that used to be a background condition. Project Freedom is not the cause of that transition, it is a symptom. And symptoms, honestly read, tell you more about the underlying condition than the treatments designed to manage them. A 21-mile-wide strait, 1/5 of the world's oil, 15,000 troops, the largest daily petroleum flow on Earth, one named military operation to keep a commercial corridor open. If the world's most powerful country needs to mobilize a significant military force to protect the movement of civilian cargo ships through a passage that has been critical to global trade for decades, the question is not whether something has changed. The question is what happens next. And that is a question worth thinking about the next time you look at the price of anything.